Good afternoon, everybody. Going to go over our Forex trades for today, Thursday, April 7th. Finally liquidated some trades. Got a ton of trades to go over. Got 8 trades to go over. First, just want to talk real quick on economic news. Yesterday, the FOMC minutes came out. Basically, the Federal Reserve is admitting they don't know when they'll be able to raise interest rates again. They say global conditions, the economy here in the United States, it's just not growing fast enough for them to justify raising rates. So in one sense, at least they're kind of admitting it in the meeting. That was really the big take out of the FOMC meeting minutes yesterday. Initial jobless claims, which is a weekly number, came out slightly better than expected. So a little bit less initial jobless claims, but you don't put too much weight in it because it is a weekly number. The ECB was out with a statement this morning hinting that with the next downturn, they might start doing what Wall Street calls helicopter money, basically giving money directly to people, which it's insane what's going on. And even JP Morgan came out this morning with a note talking about the ECB doing that. There have been other governments that have started doing it. You have the ECB now talking about doing it, Bank of Japan talking about doing it, and the Federal Reserve in the United States is next. So especially if there's another economic downturn, which we know there is, it's already started, depending on how severe this one gets. If it gets severe enough, you might be receiving some money from the United States government, amazingly. St. Louis Fed Financial Stress Index rose for the first time in 7 weeks. Not looking too good. And then there's been a lot of talk about Deutsche Bank having massive troubles, aka Lehman Brothers, and other banks around the world having financial troubles. And we even brought it up a few days ago, or maybe it was the end of last week or Monday, when we saw that GC repo rate. That's a rate that banks and brokers deal with each other. It hasn't spiked. Actually, it spiked higher the other day. Actually, it was March 31st. It spiked higher than it was during the financial crisis. And heading into the financial crisis, that had spiked to 1.6, maybe 1.65% for about 3 months. Here, March, boom, March ends 1.75, higher than then. It was a obvious indication that something's going on, that most likely there's a bank in trouble. Either that or it was just an anomaly. Well, it looks like Deutsche Bank is in massive trouble. A lot of chatter coming out this morning on it. And European banks have been crashing, all day over in Europe. So as default risk spikes over there, so not looking too good at all. Let's get to our trades. Like I said, we got a ton of trades. We liquidated 8 trades. One was a partial liquidation. We'll go over that at the end. Picked up 17.8 pips on a size adjusted basis. On a non-size adjusted basis, it's actually 1,867.7 pips. But we'll touch base on that towards the end. So first one was a swing trade in Euro Yen. We were long 126.537 and just ticked up a little bit here and then just really went against us. Stopped us out 124.996, losing 154.1 pips, or size adjusted 15.4, as we had 10% of our normal size on that one. Euro dollar was a swing trade, which we had 20% of our normal size. We were long from 1.13992. We were risking a little more than this. We were risking about another 25 to 30 pips from here, so got kind of close. And then all of a sudden it started to turn around. FOMC minutes came out, actually spiked ahead of the minutes. Actually, no, this was the spike during the minutes. So we took advantage of that, liquidating at 1.14213, picking up 22.1 pips, size adjusted 4.4. And you can see what it did overnight, pulled back, and then made another run early this morning around 4 o'clock in the morning. So you had plenty of time to get out of that one. All right, US dollar, Canadian dollar was a correlation trade with EURCAD. Worked out relatively quickly. Sometimes we hold these things for days, hours. Sometimes we hold them for weeks or months. And you're going to see that as we go down. These are all correlation trades. So US dollar, Canadian dollar was correlated with the EURCAD. They're highly correlated, although EURCAD is more volatile than dollar CAD. So Dollar CAD, we had 20% of our normal size. Where EUROCAD, we had 15% of our normal size. We were long this from 1.30819. Came in the office this morning. It was spiking on us. So we took it out, 1.31101, picking up 28.2 pips or 5.6. And you can see what it did. It continued to rally. So we'll take that. And then the EUROCAD, we were short at the same time. You're going to go in them, you're going to go in them at the same time. You're going to liquidate them at the same time. So we were short from 1.49103, 15% of our normal size. And you can see when we decided to get out of the dollar CAD, the EUROCAD was actually falling and then did reverse. So we picked up 20.4 pips there. We were in the money, obviously, a little bit more, about 4 o'clock in the morning, at least on this one. Dollar CAD at 4 o'clock in the morning, we were about flat. So either or, you probably could have made money either way. And so we picked up 20.4 pips or 3.0 as we had 15% of our normal size. And you can see what it did here. It spiked. Okay. New Zealand dollar, or the Kiwi to US dollar, and Aussie dollar. We were correlated with these since the beginning of March, really. They're pretty much, volatility level is pretty equal, so we had the same amount of size, 20% of our normal size in both. We could have held it, but we want to liquidate and get a little bit more back into the cash. So we decided to take the loss on this correlation trade. New Zealand dollar, US dollar, we were long from 0.66404, and we sold it 0.67837 for 143.3 pips, or size adjusted 28.6 pips. The reason we could take the loss so easily here instead of holding it for another few weeks or months or who knows what it could be. The next correlation, which we're going to go over, we've been in for so long, we're up so much, we just pieced out a small piece of it to offset this loss. Aussie dollar, which this was correlated with the Kiwi dollar, we were short 0.72199, covered 0.75253, or lost 305.4 pips, size adjusted 61.1 pips. And you can see the correlation actually, when we were in these, when we initiated it, it actually continued to widen, and that's why we were down on it. We could have continued to hold it, accumulating interest and whatnot, but we decided to get out because we were up so much in pound yen correlated to Canadian dollar, Japanese yen, and we want to liquidate this completely before the vote in June. I think it's June 22nd. The UK is going to vote if they're going to leave the Eurozone. They call it the GRE exit instead of the BRE exit instead of the GRE exit, like was it when Greece was leaving the Eurozone or voting to leave the Eurozone. Now they're calling it the BRE exit if Britain's going to leave the Eurozone. So we were up a lot on this, so we said, well, we have 10% of our normal size on pound yen and 10% Canadian dollar, Japanese yen. At the time we initiated, was about a year ago, the volatility levels were a lot closer than they are today. With the news that Great Britain may be leaving the Eurozone over the last few months, it created a little bit more volatility in the pound. So therefore now we've gotten, the volatility levels have escaped us. So with that said, we had 10% of each. We liquidated 25% of the 10% in both of these this morning, and you'll see them here. So in pound yen, we were short from 188.737. We covered this morning 152.219, picking up 3,651.8 pips, or size adjusted 91.2 pips. Canadian dollar, Japanese yen, we were long from 99.361. We sold this morning 82.265 for a loss of 1,538.6 pips, or size adjusted 38.5. Again, we have 10% of our normal size on both. We liquidated a quarter of the position, 25% of the position. We still have 3/4 of our position, and we want to be completely out before June 22nd, or at least out of another, say, 50%, maybe hold a quarter. We'll see how it's trading. Obviously, if we're in a beautiful profit, if our profit starts to narrow, maybe we'll liquidate the whole thing, whatever. But it was a great way to offset some of the losses from the Aussie dollar, Kiwi dollar, this correlation here. So not only offset it, but also put some profits in our pocket off of this. So like I said, we're going to continue to lighten this up between now and June 20th or 22nd, whatever the day is, and move from there. So that's it. We're going to wrap it up. If you're still trading now, good luck. If you wait for any signals, if they come out, they'll be coming your way. And assuming we get some action tonight or tomorrow morning, we'll be back tomorrow. Have a great rest of your day.